Dear trading friends, today I have an update video about my update videos. For those who watched my last videos, I did a very detailed analysis specifically on Bitcoin and Ethereum, and the following day I analyzed 10 different altcoins and also presented my trade entries. 3 of these entries have already been triggered, and today we'll go through together what the current situation is and where I now see my next entries, or rather, where I will place my next long entries if we get a correction. Let's start briefly with Bitcoin. First, a quick update. My long-term position in Bitcoin, which I opened here and compounded a bit, is currently still at a loss. That means my entry here is at 98,000 and currently the price is at 91,000. It's not looking so good right now, but that's just part of trading. Sometimes that's how it goes. My better trade, which I currently have open, is simply this trade in Ethereum. I got a very good entry at 2,746 and it's currently in profit and seems to be heading in the right direction at the moment. But even here, I still see the possibility of a correction before any upward movement. But I'm also ready to open more short positions here again. I want to explain in detail again today what this looks like for me. By the way, if you don't know my trading strategy yet, check out the video, The Simplest Trading Strategy. And if you aren't using it yet, or Trading Learners Step by Step to a Pro Trader, there's a whole playlist showing exactly how I approach things. That way, you'll also understand how my analysis, which I'll be going through in detail today, works. By the way, if you're not on Bitget yet, there are still 3 days left to get a $400 position voucher for a minimum investment of $100 or an $800 voucher for a $500 deposit. And with the second link in the video description, you also have the opportunity after registering, and this also applies to every existing user who has already signed up through my link, to get 2 $200 vouchers for the trading bot or futures position vouchers. Of course, that's really awesome. If I deposit $100, I get $400 here and another $400 here. That means you can get $800 in vouchers for a $100 deposit, or deposit $500 and receive $1,200 in vouchers. That's it for the advertisement. Let's get back to the topic because things are about to get very interesting. Let's go over to my Bitcom chart. As I explained in the last video, not much has changed with Bitcoin. At the moment, I still believe that we can reach 94,000 to 97,000 US dollars before there's a small correction or a medium-term correction to pick up some more liquidity. Why is this so interesting? I'll show you that again in a different chart in just a moment. But just so you understand, my Fibonacci entry strategy, if I pull this down here, has simply not yet reached the 0.5 Fibonacci level nor the 0.6. And that's of course interesting now, so that we reach this level where we also, let me zoom in a bit so you can see it better, and I'll remove the RSI so that we get to potentially valid levels here. We can see that here in this area. There's also an order block happening here. Right now we're also within an order block, but it's possible that we might see some rejections here. I'm not saying it has to be a complete rejection, but rather just another correction to address the liquidity we've currently built up below us. And you can see that here. So it's gradually increasing. We have new liquidity here, roughly between $86,000 and $85,500 coming from all the long positions. And whether we'll leave that untouched, I don't know. Because we've also had a strong volume candle here on the 4-hour chart. And that's very often a sign that we'll see another retest into that area. Remember, I've told you this time and again, as soon as we have breakout candles that are quite strong, they're very often followed by a retest. What could that look like if we were to go down already now? I think I prepared something on the second chart, and it's exactly this one here. That was my resistance level, where I said we should first break through it to the upside, then we'd have a nice valid potential bullish price action. The yellow line was broken to the upside with this strong volume candle, and that's why I now see one possibility, if it doesn't happen now, maybe a bit later, if we continue to rise and even actually reach 94,114, which is the bearish Fibonacci. So I'll show you with the arrow how I would approach this, that we go down, then up, then down again. If we continue to go down, I have a short position, but then I would open long positions here again with the intention that if we then continue to rise and maybe get a price action reversal here, that I can secure my short positions at break even here, but let the new long positions continue to rise. That's how I could currently imagine things continuing. Because overall, I at least see a recovery up to around 98,000 US dollars, 99 to 100. So in this price range, a long-term recovery. If we look at this on the daily chart, it's actually very, very interesting. So let's dive in again here. Exactly. That's how things currently look. If we do go down now, then we have these price targets, as I mentioned earlier, with the liquidation heat map. If we look at it now on the 3-day chart, between about 86,250 and 85,400. Take a look at exactly where we are there. 86,259 would be the 0.5 Fibonacci entry. So here, if we continue to go down, I could already see a recovery so that we revisit exactly this price range and maybe then move further up. Unfortunately, I don't have a short position open here yet. It hasn't been triggered for me. I like to be hedged in both directions and have both long and short positions open so I can manage everything in such a way that I open one position and in the worst case, take two small stop losses on the other. If we take another look at this with the big beluga smart money concepts, you'll see right away that we're now inside an order block, which is this one. And the second order block is down here right at the 0.5 Fibonacci, where this liquidity is also located at the same time. And that's why for me, it's still a very valid zone. And at the very least that we go down and pick up this fair value gap here, right where this yellow line is, because at this point in time, that's where the fair value gap is, which could still be filled. That means if this happens here, then I don't have a long position open. But if it happens down here, then I have another long position open, which is of course very advantageous. And overall, looking at it long term, I really see us getting higher prices again. And then I would enter Bitcoin again higher up with a short position, even if the long positions are hopefully already open and in profit by then. Because here we see 95,000, 97,500. Those are very nice levels. That would actually be in this area where we currently have liquidations. But of course, there will be more the higher we go. If we move on to Ethereum, as I mentioned earlier, we have this one long position that has been open for quite some time. I want to briefly go into another one where I want to share something with you. I see the next possible rejection zone at 3,135 to 3,257, also due to the Fibonacci level. I would see it like this. We rise up, maybe even go a bit higher, hit this rejection zone, make a correction downwards, and then hopefully finally have a new higher low. To then continue rising and maybe pick up the order block up here. If I add it now, I think something should light up for you. Yes, that's exactly what I mean. These order blocks here are very interesting because we have fair value gaps located here, and accordingly, this would be my current scenario, what I would trade if it really plays out this way. At this point in time, it's also very interesting, but I won't add the liquidation heat map everywhere now. If you analyze this afterwards, of course, you can use the liquidation heat map if you like. With this current rise, I see the possibility of a correction roughly down to 2,845 to 2,791 if we correct now. Yes, it's possible that we might go straight up, but in that case, my new long orders would be placed here as well, which would also be very valid, right at this level where we consolidated for a long time and then had this breakout candle at this strength. We have already corrected downward once, but here too, the next strong volume candle appeared now with a consolidation. If we go down, that would be a very interesting level where I would say I can enter long again and ride the price movement upward, and I would wait here with my short positions. Now let's move on to the altcoins. Astar, which I introduced earlier, hasn't reached its 0.618 yet. I didn't enter at the 0.5. I placed an order at 0.6 here, but it hasn't been filled yet. At the moment, I'm also curious to see if this will work out. This is what it would look like. My long position, which is right here, and my stop loss. I already introduced that in the last video, how I updated the Fibonacci now. I can quickly show you that again for those who use it. I've already set my stop loss at 0.618 based on a Fibonacci. And I would say that if we move up, I'll move it up as well. And for me, that's a valid position. If you don't know the updated Fibonacci from my video yet, go check it out. You just need to add another Fibonacci now. I've made it a bit more transparent here. I entered 0.73984 because that's exactly the same distance as the stop loss would be here. I've always set it up that way. So from 0.5 to 0.618, it's the same. That just makes trading easier for me. Let's move on. Litecoin. Not much has happened with Litecoin yet. I'll zoom out a bit more here because what we have is this Fibonacci that I shared here, this bearish Fibonacci, where I said I'd get in at $94 or rather $98 again, but there hasn't been a strong recovery up to now. That's why it's not particularly interesting yet. Positions are placed in my case unless something changes and we make a new low, then of course I have to adjust. Then we also have XLM. With XLM, I already have a short position. Again, both long and short positions are being prepared. As you can see, the Fibonacci is drawn from here to here because from this price range, just so you understand in case you're not familiar with it. If I pull it down now, we haven't touched the 0.5 Fibonacci level even once here, nor the 0.618. But what has happened since the last video? We have triggered the 0.5 Fibonacci level and it was even triggered a second time. That means I already have a short position open here, which is waiting to possibly go further down. But this one is limited, where I set my stop loss at break even with a counter position. If we go down now, I currently see that if we continue to rise, of course it will keep going higher, but at the moment it's the 0.5 or 0.618 as a possible valid zone so that we could have another retest here. For me, it's probably more likely the 0.618 because right now this doesn't look that interesting. Because we didn't really have any volume here, which is interesting, but despite everything, I would still place it. If we continue to rise, then of course I will move it up further. It would then of course be interesting if we keep going higher. Take a look at this and actually get the 0.618 as an entry. And if you go short there, then the 0.5 Fibonacci would be a very valid zone. Why would that valid zone be so interesting? You can see it here because we had a strong support zone here that we kept defending against the bears. That means here would be my current analysis. If we move higher up into here, then at the very least I see a retest into this area. The good thing is we would then have validly broken through all these lower highs to the upside with the possibility that we get short corrections and then maybe continue to move higher. If that doesn't happen, then the short position just gets triggered. I take 2 stop losses, but if we go lower, I simply make profits with the short position. SUI is exactly the same. SUI is still waiting for its short entry at 0.5 and 0.681, which is currently still very interesting to me, especially if I take exactly this entry. We have broken out of the downtrend to the upside, as you can see here, with an incredibly strong volume candle and are now consolidating very strongly. For me, this is not quite so significant yet because we have not broken through a lower high to the upside here. And that is really, really important. That we break through exactly this area, or this area validly with a close above, so that I can say only then would I enter a new long position. H-Park is exactly the same. Here too, we can see that we've already tried, so we've already broken through a bit to the upside. But at this point in time, not even an entry level at 0.5 or 0.618 has been triggered. The 0.5 level is particularly interesting to me because we had a very strong support zone there. But what you could maybe already consider here, and we'll see if this is valid, is to say that you take an entry at 0.5 or 0.618 as well, in case we correct now and actually continue to move higher. If not, you have 2 stop losses. Be aware that losses are part of trading, but accordingly your losses should always be much smaller than your gains. This strategy has a risk-reward ratio of about 1 to 4.3. It's the same with Doge. Here we haven't formed any bullish price action at all so far. All the lower highs still haven't been surpassed. And that's the reason why I still wouldn't enter a long position here. For me, it's too risky if we look at it closely. We're simply still in a bearish price action, but if we reach the 0.5 or 0.618 levels, that would be a new short opportunity for me. And always, of course, with a stop loss. But it has already triggered its short entry, as you can see here, because it's valid, and that's actually our 0.5 line, as you can see here. It has actually broken through every lower high we've had here quite strongly to the upside. Here too, we have a very strong volume candle and have already had a small retest. But here I now have a short position open at the 0.5. And in this case, my next entry, which is now very interesting because we've reached a new high, is exactly the price zone of around $167 or $162, where these 2 Fibonacci levels are. That means here it might work out in such a way that we rise, correct, pick up one of the Fibonacci levels, and then maybe continue to move higher. And that would currently be my approach because it has already tried to break its price structure here. At least on the 4-hour chart successfully. Then we still have Crow. Unfortunately, Crow just barely missed it. Crow just barely didn't make it before my Fibonacci entry, so it didn't get in here. But here too, you can see a very strong rejection at the last lower highs that we have here. And as long as we don't get above the valid high here, it doesn't make sense for me to say I'll enter a long position here. It really makes no sense to me at all, but rather, instead, I actually wait for a more confirmed reversal before I say I'll enter my long position here. Accordingly, Crow is only short at the current time. Then I also have Chainlink. Chainlink is doing exactly the same thing. You can see with Chainlink, as I pointed out in the last video, how strong it is with the markings. We currently have the same pattern everywhere. A few have already broken out, but Chainlink has not broken out yet. It is struggling so much with this trend resistance, as you can see here, but if it breaks out, I also see the possibility of reaching the 0.5 Fibonacci level. 4 hours instead, and again here, if it comes to the point where I say, okay, where could a reversal happen for an entry if we reach the 0.5 now at $12.91, or if we go even higher, which I would see as even more valid because we are consolidating strongly here, as you can see, for a very, very long time. If a breakout happens and we reach the 0.618, then we might see a reversal down to $13.21, which was our support zone, and that would also be this possibility. Solana. Also very close, so once again it just barely missed reaching its 0.5 Fibonacci level, because that would have been the next confirmation for me here, as I said. The last lower high, which in this case is right here, it still hasn't managed to break through to the upside. You can really only see one candle here and then another rejection. So this is of course risky now, even though we have a nice bullish price action here, which we could always trade again and again, just so you see that. When we see that we have a massive breakout from a previous high, it was clear to see here that we had a high at this point. The next high comes in and you would have triggered the 0.5. No stop loss, keeps collecting profits. But the next high would have been right here, no. That means this would have been the last low. Now the next high, and you can see here that at this point in time, the 0.5 would have been reached, but I would still be cautious with a long position here because we still have bearish price action in place. And that's not how it should be. So I prefer to play it safe. And I've placed my position so that even $152, as you can see here in this support zone, is my most valid zone, where we could see a rejection. Not necessarily a permanent rejection. If it happens, of course, I'm prepared, but just so that we have similar price action as we did here. But I would see that more as long-term price action, which could look like this. We had our last lower high here, break through it once, go further down, collect liquidity, and then move back up. That's roughly how I could imagine it. So that finally all the liquidity that's been in all the coins since the massive crash, since the big sell-off we had, finally gets taken out at the top. Then we'll have to analyze again how things will proceed. Is there a possibility that we continue to rise, or will we experience a larger correction again after this strong recovery? Don't forget to leave a like. You've just gotten a short update video on the current situation, and we'll see each other again next time. Ciao, ciao.